Hi and welcome to our 5-minute tax update for October 2017. The aim of our tax webcasts is to brief you on the most important developments in tax in Cyprus. So let's set the countdown clock and start. As mentioned in our previous webcast, an amending law for the settlement of overdue taxes was expected to be voted in late September. This was finally voted on the 29th of September and published in the official government gazette on the same day. The law extends the deadline for the submission of applications to enter the scheme until the 3rd of January 2018 for existing liabilities and introduces a deadline for applicants wishing to enter the scheme for new liabilities with respect to all the years up to 2015. Those wishing to have the ability to take advantage of the scheme on future assessments for these years must ensure that they have submitted their tax returns for all years up to 2015 by the 30th of June 2018. This will allow them to enter the scheme any time within 6 months from the date any assessment is issued for the years up to 2015 and they become payable. A tax bill was recently submitted to the Parliamentary Committee which amends Section 9B of the Income Tax Law with respect to the notional interest deduction, providing for certain clarifications regarding the application of the law. More specifically, the amendment provides for an explicit correlation between the deduction granted on new capital and the taxable income resulting from the introduction of the new capital. So effectively, the notional interest deduction will be available against the specific income generated from the new capital, with the relevant restriction of the 80% to apply to that income. In addition, the bill also provides for the abolishment of the interest deduction with respect to loans used for the acquisition of shares in 100% subsidiaries, which is now allowed under Section 1115. We understand that the reason for this is to avoid the double deduction of interest expense in case where such interest is already allowed under the notional interest deduction provisions. At the first hearing of the bill at the Parliamentary Committee, it was agreed that the Ministry would revisit the relevant provisions of the bill so as to make it more specific to the anti-avoidance measures rather than to abolish the provisions on the interest deduction in their totality. Another tax bill proposes the write-off of overdue taxes owed by individuals and companies which do not exceed the amount of 100 euros. It is estimated that around 35,000 taxpayers will be affected, with a total of overdue taxes of 2 million euros. The reasoning behind this proposal is that the administrative cost of collecting these amounts far exceeds the amount to be collected. Let's now look at two recent circulars issued by the Tax Department. Circular 8 was issued in late September, stating that an individual is able to request and be issued with a tax residency certificate even if he or she has not completed 60 days in Cyprus during a specific year. The certificate will be issued provided that the individual has fulfilled all the criteria for the 60-day residency and would only be issued for cases where the foreign income is from interest and dividends and the certificate is addressed to a specific tax authority. Circular 10, which was issued in early October, relates to the automatic exchange of country-by-country reports in accordance with the provisions of the relevant decree. It provides clarifications for the completion and submission of notifications and reports and specifies that this should be completed in the English language only. The circular also states that non-compliance with the provisions of the decree will result in the imposition of administrative fines. Lastly, on the local tax developments, the Tax Department has published an informative leaflet on the taxation of benefits in kind, which is available for open public consultation from the 20th of October until the 3rd of November 2017. It is pleasing to see this new public consultation procedure adopted by the Tax Department, which has been rare, and we welcome the initiative. Let's hope that they adopt this more often, but hopefully next time they will give a little more time for responses rather than just 2 weeks. The guidelines on benefits in kind have been long awaited by the taxpayers, as they provide for the practical application of how benefits in kind are calculated, which is not specifically provided for in the income tax law. Let's now look at an update on the tax treaty between Cyprus and Ethiopia. The treaty, which was signed between the two countries on the 30th of August 2015, has entered into force on the 19th of October 2017. Its provisions will come into effect in Cyprus as from the 1st of January 2018 and in Ethiopia as from the 8th of July 2018. We will close off today's tax update with a reminder of the only upcoming deadline, which relates to the submission of the notifications for country-by-country reporting purposes. This has been extended from the 20th of October 2017 to the 20th of November 2017 and applies to the years beginning between 1 January 2016 and 20th of October 2016. This concludes our tax update for this month. Thank you for watching.